Welcome back to another episode. Today I'm going to take a quick look at two stocks that I'm very bullish on in the long term of things, and I believe are sitting at somewhat attractive levels right now. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So this is going to be a quick overview of these two stocks, and I hope you guys enjoy it. The first one, no doubt, is going to be AMD, Advanced Micro Devices. Huge player in the overall semiconductor industry, and you guys know how much I love my chips, especially if they've recently seen a dip. Get it? Chip and dips? Funny. I'm hilarious. Stay tuned. Make sure to subscribe for more funny jokes like that. And if you didn't like the joke, make sure to subscribe as well to tell me, hey, I don't like that kind of joke. But we can see right now, AMD from its all-time highs is down about 31.85%. And obviously, some investors don't like taking a quick look at all-time highs, right? Just because these stocks has kind of reached those levels, it doesn't mean it's going to reach those levels anytime soon, right? So the important thing is not to get stuck with price action, but I do believe it kind of shows that, hey, some of these valuation risk has been eliminated. So if we take a quick look, AMD, for those that are not familiar, AMD focuses in two main products, CPUs and GPUs. These are processors that help pretty much the overall computational process throughout the world, from data centers, regular computers, and so much more, right? So the computational power is kind of needed from CPUs and GPUs. They recently acquired a company called Xilinx, and with Xilinx they did enter new markets, FPGAs and differential solutions. Again, a lot of big words here. In all honesty, these are pretty much just other processor solutions that are needed to kind of advance the computational power of technology, right? It's pretty cool. Another thing I want to mention is the overall market share or total addressable market that AMD is looking at. Like I mentioned, they hit numerous markets, but for me, one of the main reasons I invest in AMD is due to the data centers. The data center has a huge market cap of about 50 billion total addressable market. Obviously, these total addressable markets can continue to change as companies invest more and want to invest more on their technology. All these total addressable markets can increase over time. Like I mentioned, they have processors. These processors are used in data centers, and their processors are really good as they continue to get heavily adopted by big players. Here we can see in February 10th, Google Cloud continues, right? This isn't the first time. They continue to choose AMD's most recent EPYC processor to kind of do their computational focus in certain instances. We've also seen, for example, Amazon, their AWS, continue to choose AMD's EPYC processor for similar situations. And if you look at their press release, this is something that goes on over and over and over again, and just continues to shows the adoption of AMD. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. If we take a quick look at their most recent earnings, I wanted to showcase a few things. I've done their earnings video before, so I'm not going to spend much time here, but record revenue this most recent quarter was up 49% year over year. Full year revenue was up 68%. And they also did guide for a very strong quarter, strong year, and we're going to see that. But the CEO mentioned that the reason they're seeing strong demand is, one, data center revenue is doubling year over year, driven by growing adoption of AMD's EPYC processors across cloud and enterprise customers. With the acquisition of Xilinx, they are also kind of having more solutions for data centers, so now they will also be able to cross-sell more products to their customers. So it looking very exciting. Now I want to take a quick look at just overall fundamentals, right? Obviously I shared the great things about the potential for this company, but let's take a quick look at some of the overall fundamentals fundamentals. Trailing 12 months revenue continues to grow. We can see in the past 3 years how it has escalated. Next, we can see cash flow from operations is also increasing. We can see cash and cash equivalents also pretty high, and long-term debt is completely low, almost non-existent compared to everything else we're seeing. Obviously, with the acquisition, some of this will change, but we won't really see the results until the next upcoming quarter. I do want to see, I know some people like to look at metrics to kind of determine, hey, is this stock kind of fairly valued, overvalued, or what to what extent? Right now, if we take a look at current EV to EBITDA ratios, it's sitting about 30.81. I don't think this is super expensive, and I do like it compared to where it's been in the past 3 years. It's looking cheap to normal. Again, I do believe there's still growth potential for this company, and I'm really liking it at these price points. So I hope you guys enjoy it. The second one I'm going to take a quick look at is Unity Software, and this is traded on the ticker U. Another one of my favorites, a tier 1 company. Again, from 52-week high, the stock is down over 50%. But again, let's not get caught up with that price action. I just believe it shows us that, hey, some form of valuation risk has kind of been eliminated. Obviously, volatility can continue. Obviously, maybe valuations might still be a little bit high, but I do believe the risk to reward ratio has kind of changed now. It's a little bit less risky, could still be risky, but not as high as compared to when it's sitting at $200. So for those not familiar with Unity, they are pretty much the global engine for if you want to develop a game, right? So if you're developing a game, you're most likely going to be using Unity. Most of the mobile games created right now are using this platform. A lot of the top 100 games in mobile are also made through Unity. But Unity doesn't only help you create games, they also provide numerous solutions outside post-game creation. So if you want to do whatever type of solutions you need after creating game, being advertising, being running servers, running multiplayer, collecting data, Unity also helps out with those solutions. So they're pretty much throughout the whole process of gaming. Outside of gaming, they're also entering into markets outside of gaming with real-time 3D solutions. Things like digital twins. I mean, industries right now are using 3D, are using virtual reality, augmented reality to showcase some of their products, right? And I do believe this is a market that's going to continue to grow. Augmented reality has a huge growth potential in advertising, for example. I mean, imagine going to a clothing's website and being able to not physically, but digitally try on some form of clothing and then be able to buy it, determine if you like it or not. This is a pretty cool kind of trend. Here is a market trend forecast for the gaming market, and between 2022 to 2027, compounded annual growth rate is expected to be 9.64%. So the gaming market is still very strong. So Unity definitely has plenty of market share to grab here. And remember, they're also focusing in things outside of gaming like robotics, automation, which I am very excited about. If we take a look at their most recent earnings, they did grow revenue by about 44% for the full 2021 compared to 2020. And for 2022, they believe they will grow revenue around 34 to 36%. So this is a heavy growth company right now. It is a software company. They have high retention rates. I believe it's $130 base net expansion rate was 140%. So this is one that they keep attracting their new customers, and the customers that they have are spending more on their platform as well. I want to say one of the biggest kind of risk with Unity is its price to sales valuation, right? If we take a quick look at this metric, it is pretty high compared to most software stocks. It's sitting at about 19.1. It is cheaper than where it's been most of its life. So again, take it to grain of salt. I do believe there's some form of valuation risk. I do like Unity any price point below 100. This is one of my top 5 holdings, and I do believe it will continue from here. If we take a quick look, revenue continues to grow dramatically, right? This company does have a nice amount of cash and cash equivalents. Unfortunately, they're not positive in cash flow from operations, but these are two companies I really would recommend people to kind of focus on and learn a little bit more about. So take care, have a good day, and see you next time.